Hello everyone, welcome back to my channel and don't forget to like, comment, share and subscribe. Jackson Hole, Wyoming is the focal point for markets in the coming week as investors zero in on the Federal Reserve's annual fund cap. Business activity in the indicators in the Eurozone and in inflation gauge in the United States are also on tap, while rate cuts may be looming in China. Here is a look at the week ahead from Tommy Wilkes and Mark Jones in London. Kevin Buckland in Tokyo, Ira Losbashvili and Lewis Crowcops in New York, Ridhima Talwani in New Delhi, Sumanta Sen in Mumbai and Vinay Sachdev in Bengaluru. How big will future rate hikes be? How strong is the economy? What about quantitative tightening? Investors hope the Federal Reserve may shed light on questions when central banking heavyweights meet on August 25 and 27 for their annual symposium in Jackson Hole, Wyoming. U.S. stocks have screamed higher this summer, despite Fed warnings that expectation of a peak in inflation and a so-called dovish pivot from the central bank may be premature. Some investors believe Chairman Jerome Powell will push back against the market's optimism again, reminding investors that there is one more inflation report and another jobs number before the Fed's September meeting. Also in demand are further details on the Fed's reduction of its trillion balance sheet, known as quantitative tightening, which some investors have flagged as a potential risk to market liquidity. Concerns the Eurozone economy is hurtling toward recession are building flash purchasing managers index survey data showed shed some light on how soon that might happen. The August numbers due to on Tuesday may show another month of business activity contraction after S&P Global Final Composite Purchasing Managers Index (MPI), seen as a good judge of economic health, fell to a 17-month low of 49 in July. Eurozone businesses are struggling from soaring energy price and shortages, surging inflation and expectation of higher interest rates. An economic sentiment index for Eurozone powerhouse Germany recently showed investor sentiment falling in August as first grow that the rising cost of living will hit private consumption. Tuesday will also include the release of flash MPI numbers for the United States and Britain. More rate cuts loom in China, but analysts and investors doubt they will give any support to an economy ravaged by a property crisis and struggling COVID-19 lockdowns. The People's Bank of China sets the so-called loan prime rate for a 1 year and 5 year borrowing on Monday, the basis for business loans and mortgages, respectively, after recently surprising markets by cutting key bank lending rates. The move stoked slowdown fear that sent the yuan sliding to a 2 month low. The PBOC is prodding banks to lend more and pouring money into the financial system, but demand to borrow simply is not there, with corporates fretting about the economic outlook and consumers wary with property price plunging. With markets twitching on any inkling that surging inflation has peaked or remains at for decade hikes. Okay guys, maybe that's all from me. Thank you for watching and don't forget to like, comment, share and subscribe.